Hello, everyone, and welcome to this TT Risk Limits webinar. I'm Michael Riley with the Training and UX team here in Singapore. Today, we'll be covering risk limits on the TT platform. The target audience for this webinar is certainly administrators, as these settings and limits and so forth are put in place by admins, but not admins or traders also have access to setup and can see their limits in setup as well. The TT Setup application provides you with the ability to set risk limits for accounts and users in your company. You can use the application to set price and quantity limits for users, positions and credit limits for accounts, and define actions to take when credit limits are exceeded or when orders cross in the same account. You can configure product-specific position limits, product-specific order size limits, and exchange-specific margin limits per account, just to name a few. With regards to account hierarchies, the limits apply to the account and all the sub-accounts in aggregate. Orders submitted with an account are checked against the limits of the account, as well as any limits on the parent accounts, so risk is based on the combined positions and working orders of all accounts in the hierarchy. So as we begin, we'll be clarifying some terms that we use in TT, and then we'll be looking at the account limits, account hierarchies, user limits and risk groups, account credit limits and credit loss actions, order cross prevention, and then some tools for searching and viewing and setting limits as well. We do want to mention that we have very extensive documentation at our website, so tradingtechnologies.com. And then at the top of the webpage, trading infrastructure, data, markets, and resources. We then have a documents section there. And as we scroll down, we do have trade ADL and setup. As we'll be talking about risk limits today, the focus will be here in setup, so I can click view documentation. Then we'll have a number of different categories of setup related fields. And on the right side here, we do have risk management, specifically risk limits as an option there as well. Again, just a quick review here. This is kind of the path of what admins set up in order for a trader to be able to place trades. So we have the TTID, which is essentially an email address and password that a trader logs into the platform with. We then have the user, which represents an individual on the platform, so the person or trader themselves, and that has specific attributes, most notably market data permissions. Next is going to be account, and the account really represents money in an account somewhere. Therefore, this is really the primary focus for the limits and really where we'll be spending the most amount of time in this webinar today. Finally, there is the connection on the far right side there, and that is really just what allows that order to get to the proper IP and port number to access the exchange. For the most part, we will assume a level of understanding related to setting up users' accounts and so forth. However, if this is unfamiliar to you, we do have another webinar on this very topic, of the complete construction of that path. It is called TT Live TT Setup, which we would encourage you to have a look at if you are interested. In order to get to setup, which is going to be this page here, one can either log into TT Desktop, and then that will most likely take them to a workspace that looks like this. And from here, they can go to File and User Setup. That would pull up the setup window that looks like this. Or if you go to the browser, you can go to trade.tt, and either in the workspace launch page or the portal, you'll be able to select Setup. So at the top of the workspace launch page, Trade ADL Backtest Monitor and Setup. You'll always have that bar at the top, or you can click Setup through the portal, and that will bring you to this page as well. Now from the setup page, just so that everyone knows what we're looking at here, in the upper left, we are looking at users, accounts, limits, and so forth. If we look at users, I can see a long list of all the users that are accessible to me as an admin. And then as I select various users, the information down below will recalibrate based on the user that I click on. Now in this case, I have clicked on my user, and then a number of tabs running left to right. If I click on accounts, I'll be able to see the accounts that we'll be trading on today. These are two parent accounts, parent 1 and parent 2. And then as we move over to the limits tab, we are able to place limits on a per user basis. Again, the majority of the focus will be on accounts. We'll start there, and then we'll circle back to this limits tab on the user. If I move over to accounts, I would be able to see a list of all the accounts that are accessible to me. In this case, I'm going to go to my user in the accounts, and I can just click on parent 1. So on this hyperlink, this will take me to that specific account that I can see in the limit side of things. So I can see parent one, and then I have a number of child accounts here, or sub-accounts. You can tell that there are sub-accounts that they are by their indentation here. So I've got 4 under parent 1 and 4 sub-accounts under parent 2. Again, as I select one of these accounts, the data down below will realign, and I can then select users, in this case to see the user that is attached to this particular account. And then I have my limits tab where, again, we'll be spending most of the time applying limits and then setting those limits down below. Also on the far left, if I click on company settings, we do have a product margin section, and this is where the values for the margin can be set or uploaded. In this case, I'm going to go to the CME, and then this is going to load all of those products that have been downloaded from the CME and then loaded into TT. And as I select product margin, the product margin tab here, I can click on the products and I can type in CL, so we can filter this down to the crude oil contracts. And in this case, we do have a margin set of 5,500 and 600 for the spreads. This can be manually modified, or it can be uploaded in masse, which is part of that other setup webinar. But we will come back later on. We'll be looking at the margin values and how those are calculated and used in risk settings. Okay, flipping over to the workspace here, we are going to be setting those limits and then placing those orders in order to violate those limits to see what it would look like. So just a quick run through of what we're looking at here. In the upper left, we have a market grid with a number of contracts already loaded. So I've got a number of the first 3 months of crude oil, so September, October, and November, 2 calendar spreads for September, October, and September, November. Then I have 2 options here for the 6,300 strike. So it is from product LO and then LO3. Those are 2 different products, 2 different product groups, which we'll be talking about how we aggregate those into a family and then can enforce limits on them. Now I can place the orders by clicking on the bid. This pulls up the ticket. So I have the quantity field, I have the price, and then I can buy and sell to this account as this order type and that time in force. If I were to click buy, that places the order. Then if I go into my MD trader on the right, I can actually see that order is now working at 63.29. And I can also see that in my order book. So I can see that 2 lot CL SEP25 also working at 63.29. I can click that order to delete it from the MD trader. And then as I scroll down here, we do have a positions window. So I can see P&L, buy and sell activity. But I would note that we do have a margin column here, which again, we'll circle back to. So I'll be able to see those margin values that are accumulating as I place those orders. And then down below, I have the audit trail with a very wide message column here. So I can see the entire message when those rejects appear. We will see them in the MD trader, but we can see them down in the audit trail as well. Finally, on the right, I do have an account list widget here. So if I click on this particular widget, you'll notice that the account in all of these MD traders, parent 2, parent 2, and parent 2. If I click on parent 1, it's simply going to realign all of those accounts on all the widgets that are on the workspace. One other thing I would note, I am in simulation, as you can tell by this yellow banner on all of the widgets. So for this presentation, we're going to keep this in sim so that I can place these orders without any financial repercussion. So most of the major limits will be able to be demonstrated. I'll be able to place the limit and then click the order in. We'll be able to trigger a reject in a number of examples. However, given how some of the limits are enforced in the background, some will not be able to be fully demonstrated in sim. However, we will certainly speak to all the different limits that are available there. Okay, so going back to the setup page here, we're going to go ahead and start to set some limits. So what we can see here, we're looking at the account section. We are looking at the accounts I mentioned a moment ago. So we have parent 1, and then we have the sub-account child account 1.1. And then I have my tabs for this particular account down below, and I'm going to click on the limits tab. From here, I'm going to check the apply limits checkbox. Again, this means that any order placed on this account will have to pass the risk checks that we set down below here, which is currently blank. So to add a line, we're going to click add on the right. I'm going to click CME. We will go with crude oil in this case. So we'll select CL contract, the future, and CL as the product. We won't specify the particular contract. We will stick with the product level in this case. So I'll click add, and that will add that line item for that limit for us. Now, as I select that particular line, down below, we'll see a number of sections where we can actually set the values for this particular limit. So in this top section, for general, we'll see max position for the product, max long per contract, max short per contract, and so forth. We'll walk through each one of these in detail here, but I would note that as we scroll down, there's a section for outrights, and then there's a section for spreads and strategies, so we can kind of narrow down some of the details of the limits here. And then as we go down, there's two more sections, but they are again outrights and spreads and strategies just for wholesale orders, so block trades, OTCs, and so forth. And then the last one again, wholesale spreads and strategies. So the fields themselves actually repeat between the different groups, but we will walk through them here in just a moment. Now, going back to our line item here, these first 6 fields that we can set is really going to be quite the focus here. So we're going to skip the family here because that's going to be related to options. We'll circle back to it in just a moment. So we'll start with the max position product net. And as I set that value to 10 and save the change, that is going to put that limit in place. Actually, I forgot to also check trading allowed. So I do need to check trading allowed on the outright. So this is going to allow me to just click in orders. Otherwise, I would be prevented from doing so. So I can click in orders, and our max position product net is going to be 10. And as we set that, I would just note that in the lines, as we scroll across here, we can actually see this vertical display in a horizontal way as well. So as I expand this column here, max position product net, we can see that 10 lot there as well. Now, going back to the workspace here, I can use my account list here. I'm going to select account 11. And now I can go into this MD Trader here for the September 25 contract, and I can click in a number of 1 lots. So I've got 10 working, and then as I click that 11th, we get the pop-up that says TT pre-trade risk rejection. Worst case net position 11 exceeds max net position 10. So my limit was 10. I try to click in an 11th, and that's why I'm getting the reject. Max net position 10 for account child, account 11, and product CL. Okay, so that's what the trader would see in the event of a breach. But I would like to specify, this is the net position for this product. Okay, so when I have the 10 lot here, I can then put 10 to sell in the second leg. But because this is the net position, if I drag this order across and get fully filled, drag this order across, get fully filled, my net is 0 here. So I'm long 10 and I'm short 10. I could then go and click in 10 more orders here, and then I could cross up. Now I've got 20 on, still short 10. I wouldn't be able to add more to the long side. But again, it is the net position, so it is going to look at the combination of those various legs. Okay, I'm going to flatten that out real quick. And as we go back to the limit section here, I'm going to get rid of that 10, and then we will go into max long position per contract and max short position per contract. Again, I'm going to save those changes and let that update in the background. And really, what we're saying here is, for each contract, how long or short can we get? Okay, so a moment ago, I got long 20 in that first leg. In this case, we're going to be limiting that. Again, we're going to have a similar reject here. So TT pre-trade risk rejection, worst case net position 11, exceeds max net position 10 for this account and for this contract. Now, again, I can get short that second leg, get long that first leg. However, I am still going to get that reject when I attempt to place that 11th buy order in that first leg. All right, again, it's on a per contract. So that's September 25. I'm long 10. I cannot get any more long of that particular expiration. Okay. Again, we're going to flatten that out. And then as we go back here, we're also going to take a look at max long position gross. So change it up, we'll go with 5 and 5 in this case. I can then click that Save Changes button. And as that updates, the gross, we're looking at, what is the total long or short for this entire product group. All right, so regardless of what the contract is, how many longs do we really have out there? So in this case, I can click 5 times, I'm placing 5 1 lots, and on that 6th click, TT pre-trade risk rejection proposed position 6. So for my 6th click, exceeds child account 11, max long short position limit of 5. All right, if I go into leg 2 and attempt to buy another one, I get the exact same message. So again, that max long has been, we're maxed out, and we cannot add another buy contract in that regard. Okay, circling back to the first couple of entries here, max position family net, max position product net. We use product net. We also could have used family net. This is on the futures contract. But where the family really comes into play is that if I go back here and I want to add another limit, let's say for the CME, and we want to do, we want to be able to trade all the options on crude oil. So for the family column, I will again go to CL, and then we are going to select the options here. We're not going to specify a particular product group. So LO is the monthly, the regular contract, and then we have a number of weeklies and other options that the exchange offers here. Now the exchange defines them as specific products, and you can see all the codes here. We're not going to define one of them. We're not going to click on one to define it. So we're going to leave it somewhat open-ended in that regard. And I'm going to click Add. And again, that will add a line item here. So I have a product family for CL for the futures. Now I have CL for the options in this case. And for that max position family, I can, again, go and set that as, let's go with 5 in this case. I'm also going to, again, check trading allowed for the outrights. So again, so that I can click in orders. I'm going to go ahead and hit Save Changes, and that is going to update that risk parameter for us. Now, as we go back to the workspace here, in the upper left, we had 3 contracts for the outrights, a couple of calendar spreads, and then I did have these 2 options products. Now, they are specifically of 2 different product groups. So I'll actually zoom in here a bit. So one is from LO and the other is LO3. So specifically from different product groups. So I'm going to right click, I'm going to click and drag to select them both, right click, go to Open and MD Trader. And now I'm going to select the proper account again. So we've got the correct account, and now I can go in here and I can click in 1, 2, 3, 4, 5, and then on the 6th, we are exceeding the max family long position. So I can do 1, 2, 1, 2, 3, 4. Again, on the 4th, I am going to get that reject again. So we're able to, the real takeaway here is we're looking at 2 different product groups, only one line in the settings here for that CME CL option. And then that family, again, will encompass all of those different options products, but they're all looking at the same underlying contract or the same CL contract. So therefore, we're able to define that with a little bit, it's a little bit easier than going through and setting a line for LO and a line for LO3 and so on and so forth. Some of the other relevant fields that we'll take a look at here real quick. Under outrights, we do have the max order quantity field. So if I want to set a max click size, for example, let me get back to the futures here. If I want to set a max click size, let's say 3 lot is the maximum quantity that I want to be able to place those trades, I can set that and that will be enforced. And then as we go a little bit further down here, we can see a few other things. So applied margin percentage, we'll get into this. We showed the margin before for the crude oil contract at $5,500, and this will we'll have a place to set a limit against that. In this case, we are able to modify the margin percentage, so it defaults to 100. But we could set it to 50 or 25 if we wanted to extend a bit more credit in regard to that particular limit. Further down, we have standard price reasonability. So price reasonability is going to come into play as to how far away from the market you can place your order. So we'll set this as 5 for now. And then as we scroll down here, we have soft limit standard price reasonability. We have price reasonability related to last traded price, to the close, to the settlement, and so forth. Now, we'll go ahead and save this change, and we'll just demonstrate these 2 here. Obviously, as we go down, it's price reasonability relative to these various fields like last traded price or close and so forth. But if we go into our CL SEP 25 contract there, we now have this in place. So max order quantity is going to be a 3. So if I go in here, I try and place a 5 lot order. As I click, pre-trade risk rejection, order quantity of 5 exceeds the account, max order quantity of 3 for CL outrights. Okay, so certainly as expected. The other limit that we placed was going to be the standard price reasonability. In this case, we set it in terms of ticks and 5 ticks. So if I'm within 5 ticks of that best bid, you can see that order goes in without an issue. As I back out about 8 ticks, as I click, TT, pre-trade risk rejection exceeds price reasonability. So that is going to be enforced on that order for, based on that distance from the market versus where I'm clicking. Okay. Go ahead and remove those for a moment. And then going back up towards the the top of the list here, we did want to talk about some of these other fields, such as enforce energy limits and the market depth check and so forth. So enforce energy limits in contracts calculates risk limits based on contracts instead of flow for energy products. When it's unchecked, risk is just going to be calculated in flow for those particular products. With regards to max child slice per percentage of the average trade, this ensures that a child order quantity does not exceed a set percentage of the historical average trade size per product. So TT is going to calculate the average trade size as the volume over the number of trades for the previous 21 days. And then TT enforces the max participation rate, so the maximum order quantity percentage of the average trade size, before the trade order is submitted. If a child order would exceed the rate based on the percentage set by this parameter, the parent order would fail. Now, the market depth check sets the number of price levels of market depth allowed for filling an order. So if we've got 10 visible orders, we can set that to 10, and it would include all of those levels. Lastly, the trade out allowed, when this is enabled, this is going to allow the maximum order quantity or the maximum long-short position and credit limits to be exceeded in order to flatten a position in a contract. So kind of an emergency measure there. Going a little bit further down here, again, to the outrights, we talked about price reasonability and max order quantity. We did want to mention, formally, with regards to the price reasonability, this is going to determine by how far from the market price a user can enter that order for the contract. You can set a number of ticks away from the market using that ticks field that we used a moment ago, and set a percentage away from the current price using the percentage field as well. If you want to enforce this setting for buy orders above the limit and sell orders below the market, check the aggressive only options checkbox there. I would note the price reasonability setting apply only to matching states. So as we scroll down here, we're going to see a section here for non-matching states as well. So we will want to differentiate this between those two different groups, depending on when you're going to be placing these orders. With regards to the non-matching states, when applied, the price check uses the indicative open price as the market price. Otherwise, the price check uses the first available price from the last or close or settle in that order. If none of those prices exist, then the algorithm assumes there is no market data at all. It allows or rejects the orders based on the reject orders when there is no market data option, which is that checkbox there. This guy here. With regards to near-touch price reasonability, if the near-touch price reasonability limit is set to 5 ticks, then a buy order can be placed up to 5 ticks above the best bid, or a sell order can be placed up to 5 ticks below the best ask. If the far touch price reasonability tick is 5 ticks, then a buy order can be placed up to 5 ticks above the best ask, or a sell order can be placed up to 5 ticks below the best bid. The price drift checks for child orders of any TT slicer order type. Now, if we scroll a bit further down here, we're going to see price drift check for a 1-minute interval, 3-minute interval, and lifetime interval. So with regards to these particular settings, the price drift checks are for child orders of any TT slicer order type. So the configured price drift settings can constrain order entry by either the number of ticks or a percentage price move over a specified time interval. All right, so these drift checks are only applied to child orders of TT iceberg, TT time sliced, TT time duration, TT volume sliced, volume duration, and TT TWAP. So let's take a look at where this actually applies. So within the workspace, if I select one of the order type dropdowns, I can see TT order types, and I've got all those order types that I mentioned here a moment ago. Now, if I'm placing a TT time sliced order, the idea here is that I'm going to take a large order, 100 lot in this case, and then I've got some details on the left side here. So I've got slice details of an interval of every 5 seconds, the display of 1. So every 5 seconds, essentially, I'm going to be submitting a 1-lot order into the market. Now, where this particular setting applies is that in the child order details, I'm going to be submitting a limit order. So every 5 seconds, I'll be submitting a limit. And then the question is, what is the price? So right now, if I just click this order and launch it at 63.33, every slice would go to that same price. Now, if I click offset, I then have an option for a reference point as to where that slice goes in. So LTP means that when that 5 seconds arrives, it's going to submit that order. It will go to the last traded price, or I could have it join the bid, hit the ask from the buy side, lifting the offer. Same side would be on the buy side would be the bid. Opposite side with a buy order would be lifting the offer. So the idea here is that if that order, or if within that 5 seconds, the market has drifted more than whatever our desired setting is, let's say 5 ticks, then we could have that regulated so that we're not chasing a market beyond what we actually desire. So we would say the price drift checks are configured as part of the account position limit settings for outrights, single or all contracts, spread strategies, and interproduct spreads. The checks are applied to an order based on the price of the previous order within a 1 or 3 minute rolling time interval. 1 minute interval or 3 minute interval settings were based on the price of the initial order, which would be that lifetime interval setting that we see there as well. Okay, so popping back up to the top here, we're now looking at child account 1, 2. So this is the second child account in that first hierarchy. Now we do have the apply limits checkbox here, and what we want to take a look at is when there are multiple limits on the same account. All right, multiple limits, I should say, that apply to the same order. So what we're going to do is we're going to add, again, we'll continue to use the CME crude oil here as our example. For this one, we're going to start with a line for CME. We're going to do an asterisk for the family, and we're just going to do a line for the futures. We're not going to specify a product. We're just going to hit add. As we go down here, we're going to set a max position of, let's say, 50, and we'll enable outright trading. Now we're going to add another one for CME, and this time we will do CL, the future, and for the product, again, CL. Now we'll do 60 for the max position, trading allowed. Now we're going to add one more. Again, CME CL. We will specify the contract in this case. So we'll say September 25, and I'm going to hit add. Now as we go down here, we'll notice, again, kind of a different layout. So we just have max long position, max short position. So we're defining this just for this one particular contract. And from here, we'll say 70 and 70. And we will check that trading allowed checkbox as well. We're going to go ahead and save that. Now, obviously, if I place an order on the CL SEP25 contract, that would run into this limit line here, right? So that is what we would say is the most granular limit. It is all the way down to the contract level. So we're going from exchange to product, family or product, down to the contract level. So that is the first one that we would run into. So we would say that the risk component searches for the most granular limit that has been set up here, and then it works its way down to the least granular. Just with this setup, let's go back to the workspace here. And again, we have that CL SEP25 in our MD trader here. And let's make sure we're on the right account. There we go, on 1, 2. Now, if I go and place the 100 lot order, it's going to get that reject. So we can say worst case net position of 100 exceeds max net position 70 for account, so forth. Now, that is that 70 that we had set there on that contract level, okay? Now, if we want to target this particular limit between 60 and 70, we can certainly get rid of that reject. And then we can come in here and we'll do 65. Now, as I click, we'll see that the message comes up, TT pre-trade risk rejection. Worst case net position, 65 exceeds the position of 60. All right, so that's going to be that max position product, limit of 60. So again, with the larger order, it did get caught at that 70 limit, I should say, and then at that 60 limit, we're between that 60 and 70. So again, it starts with the most granular, the contract level, and then worked its way up to the product. Now, I would note that when we are setting these up, we are setting that max long position and max short position on that contract. On the product level, we would only catch this at this product level by setting the max position family, max position product, the max long position gross, or the max short position gross. The max long position per contract, max short position per contract would not catch that. Okay. And then one other thing to note here, the risk component is looking for the most restrictive limit in quantity terms, and then enforcing that. I would note that you probably observed this top line here for the CME and the product type future. Obviously that is set to 50. If we go back here We then attempt to place a 51 lot order, so between the 50 and 60 limit lines. As I click, that order goes in, it does not get rejected. And that is because within the limit configuration, as soon as we become more specific beyond the product type, so as soon as we specify either the family or the product, as we have here, that no longer is enforced on these particular contracts. So it's going to look for that product line, and then once it finds it, it's going to stop and find the most restrictive at the product or family level and enforce it from there. Now, one last thing to note here, if the values are blank, in this case, we just do 70 and 70, save those changes, we are removing the quantity fields on that contract limit specifically. And really the only thing to note here is that, blank does not mean 0. So in this case, if that is blank on that contract line, the search will start with that most granular, the contract limit, and then work its way up to the product, in this case, the 60 lot. So if I go back here to that September contract, I can set a 100 lot quantity, and as I click, we'll get the rejected message stating max net position 60. So blank does not mean 0 by default. If I put a 0 in there, certainly that would be enforced, but nevertheless, good to keep that in mind. Okay, switching over now to this child account 1-3, we would like to point out that there are certain non-position related settings that we see in the outright section that kind of operates slightly differently. So again, I'm on child account 1-3 in this case, and I'm looking at that granular line of the most granular line of CL-SEP25. Now, as we scroll down, I can go to that outright section, and what we're going to see here, a couple of fields. One is going to be max order quantity, and the next is going to be the standard price reasonability. So I've got both of these set at 15. As we kind of go up our hierarchy here of more broad limits, as we scroll down, we can see max order quantity of 10, standard price reasonability also set at 10, and then at the top line, we will see 5 and 5. Okay, so going back to the top, the point here is that, again, the risk component searches for the most specific and then goes to the least specific. So CL-SEP25, the contract level, then to the product, and then to the product type. The risk component will find the most granular limit at the account level and apply that setting without looking for the most restrictive. So again, we want 15, 10, and then 5 on these limits. So we should expect that we are able to put up to a max quantity of 15, and we should be able to put that 15 ticks away from the market. So if we switch over to our workspace, again, we are looking at account 1-3 here. So make sure I'm clicking on the right one. Always good. And I'm going to extend this down a little bit here so we can see some more prices. 10 levels of depth here. I can click a 1 lot in and delete. I can go to about the 7th or 8th level, 1 lot in and delete. 12, and then as soon as we get outside of 15, we then get that message, TT pre-trade risk rejection exceeds price reasonability. So we are getting caught on that 15. Where is it here? There we go. Standard price reasonability, the limit is 15 that we set. So again, it is finding that most granular line. So in this case, the most granular being that contract level, CL-SEP25, and then it's going to enforce that, and then that's it. It's not going to go up to the product line and then additionally check what is the price standard reasonability at this level. It's just going to find that most granular and then use that and enforce it accordingly. Okay. Also, we had set the quantity limits, so I can go in here and place it in a 6 lot. That order goes in without a problem. We could do a 11, and then if we do a 16, we'll then get that reject. There we go. Order quantity 16 exceeds child account 1-3, max order quantity of 15. So same principle in that regard. It is finding that most specific limit and then enforcing it accordingly. If I delete these and we go out a month, so we're looking at MD Trader on the right, that's going to be the October 25. I should then be able to do a 9 lot without an issue. As soon as I do a 10, we get there we go. TT pre-trade risk rejection exceeds price reasonability again. In this case, order quantity 12 exceeds the account, max order quantity 10. So the max order quantity of 10 was on that contract level. So we go down here, max order quantity 10, price reasonability 10. I think I hit that price reasonability first there. I had to tighten it up with my order placement. But nevertheless, we are able to find that the most granular for that particular order on the October, not the September contract, then gets enforced at that contract level. Okay. Okay, a few other things that we did want to touch on would be the use of spreads and enabling those as well. So a lot of this focus has been on this outright contract, certainly the CL SEP25. Right now, if we went back to the workspace and if we went over to the right here, if I tried to click an order in, we have the September contract on the left, the October in the middle, and then we have the actual spread, the exchange offered spread for the two on the right side there. So what that reject says is simply the account is not allowed for trading CL spread strategies. So I did want to just note that if I went back to this product level where we are not defining the contract, the specific contract, just the product, I could go down here and check that checkbox for spread strategies. And if I click save changes, that is going to update, and that is the checkbox really that would just allow us to trade this. And then all the quantities and so forth that we talked about earlier would then be applied to the two legs that this particular spread is going to be applied to, so the September and the October. So as I click here, we can now see that those orders are starting to go in, and I can then start to place trades and so forth on that particular spread. Okay. Going over, let's go to child account 1.4. We do want to talk about interproduct spreads within this exchange here. So again, we'll go with apply limits here. I'm going to check the add box, and we'll actually go with ZN pipe TN. So this is a 10-year spread at the CME. So I'm going to select that contract, and then I'm going to go ahead and click add. That's going to give us the line item as normal. As we scroll down here, I'm going to check trading allowed under interproduct spread strategy, so slightly different layout here. And then I could set a max order quantity and so forth. However, we're just going to leave that line. I'm going to go ahead and save that change. Regular fields as we scroll down there. I'm going to save that change, and as we go back to the workspace, at the top in the search, I'm going to search for ZN pipe TN. Again, this is going to run a search over all the products available to us, and that first hit is going to be what we're looking for, ZNTN. I can hover my mouse and click on that market grid, and that will pull up that entire product group of all of those particular spreads. Now, I'm going to open an MD Trader, so I'm right-clicking Open and MD Trader on that first contract, so that first spread, which is a +7 -5 TN contract. Now, as I click, we're going to get a reject. We're going to switch to the proper account first. I'm going to click. We're then going to get a reject. Account 1.4 has apply limits set, but contract ZN SEP25 is not configured for trading. Now, it's specifically noting that ZN SEP25. So the takeaway here is I have set that interproduct spread. So I can trade that interproduct spread, but we do need to account for the legs. So all risk is really based on the leg positions. So I just need to go into add here, do ZN first. So typing ZN in the search at the top, first hit, 10-year note T-note futures. I'm going to select that. I'm going to hit add. That adds our line item. Add. TN is the next one, or the second leg. I'm going to select that. Click add. Now for that ZN, let's go with 10 as our max position. And I'm going to go with trading allowed. I'm going to do the same for the TN contract. 10, trading allowed, and I'm going to click save changes. Now, I'm specifically setting that, let's pull that back up, max position product. I'm setting that specifically as a 10 lot. As we go back to the spread, I would point out in the naming of this spread, it does say 7 times ZN SEP25 -5 TN SEP25. So if I'm buying a one lot of this spread, I'm actually buying 7 of the September 25 and selling 5 of that SEP25 TN. So when I click, that one lot is going in. That's not a problem. It's going to be that second lot that'll give us a reject. So as I click, we can see worst case net position 14 exceeds max net position 10 for account and product, ZN. Now it's specifically taking an issue versus checking that ZN side of the spread, and it's saying my one lot is looking to buy 7 ZNs and then sell 5 TNs, which is fine. It's within that 10 contract limit. However, if I try to place a second one, now it's going to be 14, and that is breaching that 10 lot limit. The takeaway here really is if we set those interproduct spreads that we can see here, ZN, TN, we do need to have the individual legs populated in there as well. Okay, going back to the setup portion of the platform here, we also want to kind of spend some time and talk about account hierarchies. So this entire time we've actually been kind of existing in this particular hierarchy. So parent one, and we had those 4 sub-accounts that we've been kind of moving through with different variations of limits. But really, we do want to kind of talk about, setting parent limits in a parent account and then child accounts. So first, in the parent account, we go to the settings. We're going to have all kinds of settings related to the particular accounts, most notably the parent field here. So in the parent, we just have this set as none, so it exists at the top level and it has no parent account. As soon as we go into a child account, we can see that this has already been set as parent one, which is the name of that parent account, and then we can see that they are in the display, they are indented. Each child account there is then indented, so we can see those particular accounts and where they roll up to. Also kind of an expandable view here so that you can see which accounts tie to which parent. Okay. Now, the important thing with regards to risk and limits that we're looking at here is that if we set limits on a child account and then an order is placed on that child account, those orders are certainly subject to the limits that we have set on that child account based on everything that we've talked about so far. Now, those orders are also subject to the limits that are set at the parent level as well. Okay, so the kind of example that we usually talk about is that we have 4 sub-accounts here. Let's say there's a small trading firm with 4 different traders. Each one of these traders could have their own account. So you have trader 1, 2, 3, and 4. Now those traders could have varying limits at the child level. However, at the parent level, they might have a top level limit as to how long or short they get of a particular product. So trader 1, in this example that we have below, we can set this as, let's say, 10, and we will save that change. Oh, actually, we already have 5 here. Sorry, a little left over there. We'll change that to 10, and then everything is tradable there, so that's good. And then if we go back to the parent, we can then set this as, there we go, limits. We'll apply the limits, add. We will do CL here. And once we add that line, we can go down here and we can set this one. We'll set it more restrictive just to emphasize the point. So we'll set that as 5, trading allowed, and we'll save that change. Now, going from here, going back to the workspace, we are making those changes on account 1-1 in this example. I can now go to the market and we can say, the 10 lot, we can click that in. Worst case net position 10 exceeds max position 5 for that parent account, parent 1. All right, so even though in the child account we did have a 10 lot limit set, it passed through that child account, right? So we have the limits in place for the 10 lot. There was no breach. It continued on. It then went to the parent account where we had that limit of 5. It then got caught, 10 obviously being greater than 5, and then we get that reject message that we see here. If we go with 11, there we go. We can see worst case net position 11 exceeds max net position 10. So in this case, it does get caught at that child limit level. It does not pass on to the parent account. So it does catch it at that most granular level as it's working its way up the hierarchy. So as that order is placed in the child, it works the limits there, and then it moves up to the parent level as well. Just as another example with regards to these parent-child setups, generally, as you go higher, you kind of want wider limits. Obviously, we're being more constrictive with the parent and a 5 lot restriction on the max position in this example. If we remove that one, we can save that change. Now, like I said, you would have a 100 lot or 1,000 lot at this level, but we'll go in here and we'll say CL. We'll do crude futures. We're not going to specify a particular contract, so we want this somewhat open-ended. And actually, let me just put one on here for the CME. So if I go to the CME, we won't specify a family. We'll just say for the futures in general. Again, being very broad with our parent level limit, what we can do is we can scroll down here, trading allowed certainly, but if we want to set something like price reasonability, and we just wanted this checked, 10 in that case. If we just want to set some high level limits in this regard, we can save that change. We still have that, there we go. We still have the 10 lot at the child account, but at the parent account, we'll just have this price reasonability limit. And I would note, we only have two, parent and child. You can have multiple levels here. So you can have 10 different parent accounts with certain limits being checked at each level. However, we do want to go back here and just to demonstrate if we are still on account 1-1, so that is good. In this case, I can click an order in here about 3 or 4 ticks from the market. Go beyond 10, we do have exceeds price reasonability, so that does take effect as well. Again, a broader limit applying to all orders, all futures orders on that particular parent account as well. Okay, so we have covered the limits really on the account side pretty extensively, and in doing so, we've actually pretty much covered most of the limits, most of the information on the limits on the user side as well. So what I'm going to do is I'm going to switch over to users. We're looking at my user in this case. I am connected to all of these various accounts here, so account 1-1. But on the user side, on the limits, same layout that we see in the account side. We're going to check that box for apply limits. I'm going to check add. And from here, let's say my particular user needs some kind of a limit on maximum click size. So we'll do this for all products. We won't specify a product, we won't specify a family, so we'll just get that line item on there. Then we'll do trading allowed and then max order quantity 2. So very restrictive in this case. So we'll save that, and then we did have this example that I was talking about a moment ago where you have the trading firm, 4 traders, each one can have their own account. Let's say you've got multiple traders all in the same account. You don't want to restrict that particular account with a 2-lot maximum trade quantity. So if we need to specify a particular user, a particular individual, we can use the user side to set these particular limits. Now, we are adding that line. I've gone down here, we've set the max order quantity to 2. I would note the layout here is exactly the same as the outrights in the account section for those limits. So we can see standard price reasonability, soft limit standard price reasonability, last traded price, close, settlement. So same layout, same features on the account side. At the top, there is no position limits that can be set here. So an important distinction between the two. Again, accounts represent money, so the risk and so forth is more applied on that side. And you could have multiple users all in the same account as well. So you really want to have that, those quantities applied at the account side. Nevertheless, in this example, max quantity of 2, that should allow us to come back over here. As I place a 2-lot, we're able to get that one in. Let's go with 4. And now we'll get a different message here. Order quantity 4 exceeds user, specifying the user instead of the account this time. Max order quantity 2 for CL outright. So again, same layout as far as setting the limits, similar fields as we go down here, almost the exact same for the outrights there. And then with regards to the reject message itself, same layout. This new quantity exceeds either the user or the account and whatever the value is that was set in setup. All right, next up, we're going to take a look at risk groups. So on the far left side here, users, accounts, and so forth. Second to the bottom is going to be more, and then I'm going to look at risk groups. Let's go ahead and save that so that I'm able to trade. As that saves, what we're going to be looking at with risk groups is, let's say you have 2 different account hierarchies that do not share a parent account, and they cannot share a parent account. A longer example would be accounts have been shared over with specific exchange connections to a particular company. You can see those. You can connect users to those particular hierarchies, but they can't be crossed. Now, if they both have a CME connection, you might have to set individual limits on those CME products. Well, with the risk groups, we're able to kind of eliminate that. You can set it once, you can group them together, even though they are remote in their account trees or account hierarchies, and then you can have those risk checks accordingly. So what we'll do here is we'll go new risk group. So we'll do webinar group. We're not going to set disable trading, so we'll just go ahead and create that particular group. Now, as that creates, settings, basic information, name, description, disable, enable. On the account side, we simply add the accounts. So we'll use those parent 1 and parent 2. All right, hit select. There we go. So I've got parent 1 account, parent 2 account. I can go ahead and save those changes. And then we'll skip credit. Actually, no, let's take a look at credit. We're going to get more into credit here in a moment, but on the credit tab, what we're going to see is the ability to set a account balance. So I could say 100,000, and then I can apply some rule. We're going to get into this more in depth on an account basis here in just a moment, but it can be applied on the risk group as well. We'll circle back to that. Going to the limits, however, we can see same layout. So apply limits, we've got that box checked. I can again go in here. I can set a crude oil limit, going with add, and we'll say 4. And then trading allowed. So again, very restrictive with the 4 lot here. Now, as we go back to the workspace, let's get rid of that order there. And if we just go to the parent account, so parent 1, we're not using any of the child accounts in this case. I can click in some orders here. As it turns out, my apply limits checkbox was not checked. Let's go ahead and save that. And now we can go back to that workspace. Again, on the parent 1 account, as I start to click in, I think it takes a moment for that update to take place. Eventually, once that update is done, I now click in, there we go. I can place the 4 lot order, so that was 4 1 lots. But again, worst case net position 5 exceeds max net position 4. For risk group, again, stating that it's a risk group, it's not an account, it's not a user, and where that limit resides. So that allows us to put that in place there as well. Now, going back to the example that I gave a moment ago, we have these 2 hierarchies. We're looking at both CL sub 25, CL sub 25. I can change this other account to parent account 2. I can do 2 into parent account 2. I can do 2 into parent account 1. And either way, whichever MD or whichever account I place this next order on, we will still get that reject, again, stating for that risk group. So groups those, those separate accounts that are in separate hierarchies together, and then does the risk check from there. Okay, going back to setup here, and in this case, account 1-3, what we want to do is we want to talk about the SOD credit tab. So I'm going to uncheck the apply limits from this particular limits tab. As we go in here, what we're going to take a look at is going to be the credit settings and SOD settings. So at the top, we have create start of day record. If this checkbox is checked, this means at the end of the trading session at any exchange, a snapshot will be taken and positions will be carried from one session to the next. So a snapshot is taken of the net position, it becomes the start of day record, and then the next session begins and the positions are marked to settlement and so forth. Now, if you have limits in place, those limits are checking against any existing position. If you have this checked, it's going to track those from one session to the next. If it is unchecked, those positions will just clear out, and then those limits will be the same limits, but starting with a 0 position on all those different products. So it is an option depending on your configuration. You can either check that or uncheck that. Scrolling a little bit further down under credit settings, we have this check credit checkbox. If we check that, we then have a rule drop down here, so I can check the credit of my account. Let's say the daily limit is 2,000 and it is set to apply the P&L. So essentially this is saying that if I lose $2,000, that is going to end my trading for the day. So I'm setting a P&L check in that case. The next one here is going to be apply margin limit. Now this means that if I have a product that has a $10,000 worth of margin and I have, let's say, 100,000 in the account, at the start of the day, I'll be able to trade 10 lot, and then, actually I'll be able to trade 10 lot for the entire day. So as long as that margin on that particular product doesn't change, I'll be able to trade a 10 lot. Now, if I combine the two together, apply P&L and margin, this means that I'll be able to trade that 10 lot at the start of the day. If I make another 10,000, I'd be able to trade 11 contracts. If I lost 10,000, I will only be able to trade 9 contracts. So that is the apply P&L and margin. So we'll go ahead and save that change there. And as that kicks in, we'll go back over to the workspace here. That account was account 1-3. So I'm going to, again, go to the proper account. Now, as I click, you'll see what happens here from the trader's perspective. I place a 1 lot here at 63.34. In the positions widget, I can see the account, CME, and CL, and so forth. We can see that my margin is that 5,500 that we saw way back at the beginning of the webinar. So one lot is getting charged 5,500. My balance is that 100,000 minus 5,500, leaving me with 94,500. Balance percentage used, and then just the balance type, which is what we set in that particular dropdown, apply P&L and margin. Now, if I were to lose money in this particular product, in this case, I've lost $10 now. So now that is going to impact the balance. So it's going to be the total margin that I'm taking up, which is just that one lot, minus that 10 that I just, well, plus the P&L, which is a minus 10 in this case, and it's going to continue to adjust in that way. So anytime there is any P&L that changes, that's going to then impact the balance and then how many additional orders I can place. From here, if I just place, let's say I want to just place a 100-lot order, we will see the reject credit required for this order, $550,020, exceeds the child account 1-3 credit limit of 100,000. Even in that reject, margin is just 550,000, but it does include that difference in P&L that I have there as well. Also, under this rule section here in credit settings, down towards the bottom, we do have apply pre-trade span margin. We did do a whole webinar on this. Pre-trade portfolio risk is the title of that webinar. But if we set this, it's the same idea as in we are checking trades against the amount, the balance versus the amount of margin that is required. The real difference here is that margin calculation. So the example we've been talking about is that fixed 5,500 is charged per contract all the way out on the curve for that CL contract. With the span margining, the orders are going to go in. It is going to look at correlated products and so forth and hopefully give you a better margin rate depending on what you're trading, certainly. But nevertheless, we are able to select that apply pre-trade span margin. And then as we go down here, we would be able to populate an account balance and so forth in this cash balance section. Again, we do have a whole webinar on just that one topic, so we do encourage you to take a look at it from there. However, once the information is set up here and you have set this to span margin, you have the balance in place. When we go into the workspace, the only difference from here would be under widgets and miscellaneous. The traders would look at the balances widget here, and then they would be able to place their trades, and they would be able to see what is all the detailed information for the margin charges and so forth here. So again, we do encourage you to take a look if you're looking for more information on that pre-trade portfolio risk or span margining. We would encourage you to take a look at that webinar. Lastly, from here, if we go down a couple more ticks, credit loss adjustment setting. What we're able to do here is check the box for when credit loss is, let's say, 90% of the daily limit or account balance, which is going to be the value that we had up here when it changes over to apply P&L and margin. So if we set this to 90%, we're saying, if this account loses 90% of this daily limit or the account balance, we then want to take some kind of action. So what we're able to do here is we're able to set this to kind of lock the account so that trade out or reducing positions is all that is available. Or we can disable trading, can take further steps to then cancel any working orders and then close out any positions. So that is to liquidate the existing positions on that particular account. There are certain exchanges that this is supported for, certain exchanges that are not. You can see at the top, account liquidation is not supported for the exchanges that are noted here. I would say to reach out to us if there are any questions on specific exchanges. We can certainly look into that for you if that is something you're looking to implement. Okay, if we go back to the parent account here, we also wanted to mention that on the settings tab, if we scroll down a bit here, previously we talked about the parent settings, so we can select an account if we want to make this a child account of some other account. But we also have order cross prevention. Now, order cross prevention sets a rule set basically for orders that are potentially going to cross. So if I click the drop down here, we can set this to not applied, in which case there is no order cross prevention. We then go through our list here. Reject new would mean that if this order is going to cross another order, either on this parent account or on any of the sub accounts underneath this parent account, it will reject that new order. Okay, so we'll save this again just to demonstrate on parent one. We do have all 4 of these sub accounts that are underneath. All right, so if I'm placing on the best bid in some product in account 1, and I try and sell into that best bid with account 2, that's going to be a match, and that is going to get a reject for us. Okay, so in this case, if I go to Get a couple of these going here. Now, I have that bid at 63.48. Clicking below, and you can see TT pre-trade risk rejection, rejected new order, avoid crossing resting order. All right, so it does know that that order is working there at 48, so I cannot place that order without getting the reject. If I'm above, I am able to get it in, notably at a higher price. Going back into that drop down, we do have the ability for cancel resting. So in this case, the order would be resting in the market. I would place the additional order. We would be waiting for the cancel message to go to the exchange to cancel that resting order, the first order. Once it is canceled, we would then release the new order, at which point it would, well, in the example we were giving, it would then be filled. Position transfer, we'll go ahead and walk through this one here. So as I save that change, the position transfer is actually going to just generate a fill into each leg. So if I am, again, going with that order down there at 48, so I've got account 1, or child account 1, and child account 2 here. If I then click in down here at 63.46, as soon as I click, you'll notice I now have a one lot. So I got filled over here at 63.48, and I got short an additional contract in leg 2. And if we then go into, well, we have a bit of a filter going on here. There we go. So child account 1, we now have that one lot. We also see the negative 2 lot there. But if we just pull up the fills widget here, in the fills widget, we can see both of those fills that came through. We can see the route here is AOTC, that's avoid orders that cross. But nevertheless, we do hit each one of those fills both at spot 48. And then on the accounts, we can see account 1 and account 2. So it does specify that route as AOTC there for us. I believe there's an additional field. There we go. And then under manual fill, we do see transfer as well for that, for those crossed orders. So we do have that feature available as well. The last few in the dropdown, position transfer if resting order is best bid or offer. So in the example I just gave, my first bid was 5 or 6 ticks off the best bid. So in this case, it's going to lock it in to only have that effect if you're on the best bid or offer. And then order cross prevention not allowed just means that this cannot happen anywhere down the hierarchy that we are involved in. So if I leave this on position transfer, which it currently was on, if I then go and look at the child accounts on this same settings tab, I can scroll down, order cross prevention, position transfer, and you'll notice in red text, rule is set in the parent account. So this is locked in. I cannot modify this further down the hierarchy. So everything, all child accounts, all sub accounts further down the hierarchy are subjected to this rule, and it is locked in there. Okay, so lastly, we do want to go back into accounts, and as we look at users' accounts and limits in the upper left, we do have this window here which allows us to quickly search for and modify and set new limits within our accounts and users and so forth. So when we pull this up, type name and exchange, so we can go in here, we can start to search for particular limits. So if I want to go to accounts, I then go to, what is the name of the accounts? Now, if I wanted to target, let's say, all of those sub accounts that I had earlier, I could say child ACCT. So now I can see 1, 1, 1, 2, 1, 3, 1, 4, 2, 1, 2, 1, 2, 2, 1, 2, 2, 2, 3, and 2, 4. I can check the top box to select them all and hit OK. And that is going to run that search for us, and then it's going to return the information. So all the limits that I have placed on those various accounts. So we can see the type, account, name, exchange, product family, and so forth. If I start to scroll out, we're really looking at the same kind of display that we saw on the particular, let's take a look here, on the particular account limits tabs. So as I scrolled out here, we could actually see the various columns. So the vertical display becomes horizontal here. And we're really looking at the same display that we see on the accounts here in the limits section. So we can scroll out, see all that information. If I wanted to select one of these, let's say this product level crude oil limit, as I select that, I can scroll down. Sure enough, the horizontal display becomes vertical. And I can then go in here, I could change the product or instrument if I needed to do so. I could also modify, let's say max position product is 90. Let's say we want it to be 100. I can modify it there, click Save Changes, and that's going to modify that limit for us on that particular account. With that same example, actually, I'm going to select a couple other accounts here, and in this case, we'll see it just says that the values differ. But again, let's go with 100. So now I can take limits that are not the same. I can modify those as well, set them both to 100 if I need to do so. Okay. As I scroll down, you're going to see those same groupings as well. So general, outright. Get down here, we'll see spreads and strategies. There we go. So all of these values will be, or the layout, I should say, is going to be consistent throughout. Okay. Going back to the top, we just did the search limit and then we modified. We could also go in here and we click new limit. So let's say account, continue. Now from here, we get prompted to populate a particular contract. So in this case, CME, CL, future. Let's change that to ES since we've been going with crude oil for quite a while here. Here we can do ES. I can go to update. So now we've specified that particular product, CME, future, S&P 500, and then I can determine which accounts I want to add this to. So let's go with the parent, parent 1 and parent 2. Hit select. I can see those accounts are now populated. Again, we'll do a 100 lot on the max position for the product. Scroll down, outrights trading. We'll set that to trading allowed as well, and then we'll go ahead and create that limit. Now allow that saving. Again, this was on parent 1 and parent 2. I can pop back over here to accounts, go to parent, limits. Parent limits. Oh, I'm on the wrong account. Aha. All right, so when I select the right account, parent 1, and I scroll down, there we go. Now we can see that ES, 100 lot, max position per product. So that did update accordingly. All right. That example, we're using a specific account, certainly. That is where, as we've been saying and spending most of our time today, it's all really, most of it's focused on the account, but we could certainly apply it or search through a risk group or through users as well. Lastly, from here, after we do the search, in this case, we have that search for all the child account limits. If we wanted to click into any of these, you will notice at the top, I can copy these to other accounts or other users and so forth, or I can delete them altogether. And once we click delete, then those have now been removed. All right. All right, folks, with that concludes our webinar here on TT risk limits. Obviously, if there are any questions, feel free to reach out to us. Again, the training team's team distribution is going to be training-ux@tradingtechnologies.com. Thank you again for joining, and we hope to hear from you soon. Take care. Bye-bye.